Good morning, traders. It is 8:02 a.m. Chicago time, 9:02 Eastern on Friday. Happy Friday today, the 19th of August, 2016. This is another Trader Bite. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overall night session or overnight session is showing a lot of risk aversion. The only thing I'm tracking that is positive right now is the US dollar index up 0.35%, or 33.5 cents. Everything else is red. Gold being worst off. Gold down about 1%, trading near lows at 1343.5. 1342 is a low overnight, followed by the Euro stocks down 0.94, DAX 0.46. British pound 0.47, the U.S. Treasury bond, Japanese yen, crude oil, mini Russell, and the S&P mini follow. So it's looking like capital is moving towards the dollar, I guess. But overall, just don't forget that today is triple witching, Friday options expiration. Actually, I think it's double witching. Actually, it's just options. I don't think single stock futures are expiring today, as far as I know. So that's in play. The expiration is at 8:30 Central, which is in 27 minutes. Um, Other than that, looking at other news or looking at what else is driving us here, um, just looking around, the biggest thing to keep an eye on is crude oil. Crude oil's hit. Like I said, it's trading at unchanged right now, 48.88. It was down earlier, but it got as high as 49.36. What's interesting about crude oil is that it's in a 6-week high. It's up about 22% from the beginning of the month, believe it or not. But also, it's all the result of, or much of it is attributed to the fact that some major oil producers are talking about freezing production. And freezing production somehow is being translated into scarcity, a limitation on supply, and therefore prices responding, the equilibrium prices moving up. But it's a surprise because Saudi Arabia is pumping out more crude oil than it ever has, something like 10.7 million or 10.67 million barrels per day, with Iran also reaching a peak and Iraq being very steady, among others. I'm not a fundamental analyst or anything like that, but I think you need to keep in mind that there's a lot of speculation here that somehow the supply is going to dry up. However, and it may do so as prices climb. These countries don't need to pump as much to try to bring their budgets back in line. But that's how things are shaping up. The dollar is set to be heading into a long-term trend change by a couple of large investment firms. Something to keep an eye on. Other than that, I don't see much that is driving us here. Not much bright yellow spots on my Trade the News feed. What's on deck for today? Pretty much nothing. We've got the Baker Hughes rig count at noon Central, 1 Eastern, and as far as Fed speakers and so on, we had Kaplan last night, but we don't have anything coming out today or anyone coming out to speak today. I don't see any major earnings. So expecting this to be a fairly quiet session today. The market's going to have to move on its own power, which is not a bad thing. So let's switch gears real quick here and look at what was expected yesterday. Here's our primary hypothesis for yesterday. Our primary hypothesis is that the market is likely to open and chop, push to take out the double top, the small double top we left behind from yesterday, the week high right here, and then start to rotate down. And what I talked about by drawing these squares here yesterday is that we are likely to be stuck in this area here, and these areas are divided by this gap zone. And if the gap zone is not taken, it's likely to turn over and push back down towards the 71 and potentially the 69.5 area. That was hypothesis number one. Didn't quite work out that way. Hypo 2 was more in line, except Hypo 2 in my expectation went farther than I actually expected it to go farther than it actually did. What the market did was test down and then push up, and then we basically stopped right inside the gap zone. We did not complete the exit out of the gap zone and then started to test and tackle the range on that island top we put in on Monday. We just basically turned around. So neither one of these was very good as far as the plan was concerned. It was hard to tell what is to be expected here, but the bullish side of things, made it so that here again we tested right up against the gap zone high. 84.50 is exactly the low of that island low on Monday. And the top of the gap zone. So and the market just basically stopped in its tracks right there. Very, very balanced day. Just mostly, almost a double distribution, a very bizarre looking double distribution day. Very tight value area range here, and a weakish high by the time we closed. The rotation down here looked really good for a pullback chop and a continuation lower, which would have had us play into Hypo 1 finally, but instead the market just continued to drift up. It wasn't, for me personally, it was definitely not a good day yesterday. It just didn't, saw some good rotations here. The harmonics here seemed to expand a little bit, but overall it just continues to drift higher. Speculation is somebody posted, if you're on Twitter, you might want to look up Lord Vortex and look at an article he posted about Chinese funds coming into the U.S. looking for the safety of the U.S. market and keeping things pushing higher, and that may be possible. Anyway, so that's how things look. The overnight session, coming into the overnight session, not much there. I mean, it was completely dead through the Asian session, and then the European session started off the selling, and we sold off. Pretty good impulsive move, and then we've basically made a double bottom so far with a test of the mid, and this is a retesting again, which is a little bit odd. But the expectation here is that it's likely to push a little bit higher on the open, come back to the point of control from yesterday, tackle the 2181 area, which I'm expecting to be a 2180-75 actually. I'm expecting that area to be to show a fair amount of resistance. With options expiration, I'm looking for this to rotate down and start moving towards that 69.5. So that would be my primary hypothesis, and I'll draw that. But overall, in the overnight session, this shows some long liquidation. We essentially we liquidated and have found balance in the zone here to form this lower point of control. We're shifting the point of control down. The day before that, we shifted the point of control up. In yesterday's session, it looked like the bull was back in play, but this morning it looks like it may be sideways to down. But the market has surprised us with that sort of idea for the auction to continue in the direction it came into. It hasn't been very consistent doing that. So not much to say here other than We're opening on the low end of yesterday's range. We're trading 2178.75. My expectation is a quiet open. I'm looking for a test towards 2181. I'm looking for some resistance, and I'm looking for it to turn down, and then tackle, pull back, tackle the overnight low, pull back, and then ultimately work its way down. That's a very, very ambitious, ambitious range that I'm looking at here for Hypo 1. But that would be the natural course of the auction in this situation. It's got we are basically stuck in this box here, and yesterday couldn't get out of it on a very, very clear attempt, and we are lower now. If the alternative comes in, which is Hypo 2, and we get a quick test down, and then start to move up, and we start using the 2081 as a support area, and we move into the gap zone, then again, just like yesterday, we're going to look to tackle 2189.50 for a test, and that would be the target. I'm having to scale into almost every position I'm taking on rather than all in scale out like I'd like to do, because the rotations have been very tight, and you kind of have to manage a position by using size to manage risk in this environment. But it's look, it's bound to loosen. It's just the market goes from balance to imbalance, back to balance, and it's just a part of the process of um, of the market responding to the forces underneath it, the supply and demand forces underneath it. If we look at what we've done overall and we add yesterday's profile, you could see that we're just filling in the top. We keep trading this upward distribution, and all we've done is we filled in with yesterday's trading. We filled in the top, and this low volume node here held us back. That low volume node is the gap zone, and that's really your over underline. Until it gets back up there, I'm expecting it to keep rotating inside of this wonderful, just ugly August range, sort of, that we've been in for quite some time. Very, very choppy trade. So until we break through the 84.5 and start pushing into this, I'm going to be waiting for further all-time highs. I don't see any evidence yet, despite the people who are going to scream, sell it, the market's going to crash, blah blah blah, all that nonsense we've been hearing for the last 8 years. You know, you got to trade what you see, not what you think should happen. And what I see is the market's not giving up these prices. And if it's not giving up these prices, there's no reason to be long-term bearish. Long-term bearish means there has to be a correction way down, to some significant areas. And right now, significant areas are 2080, 2010. 1980, like way down there. Okay, so we're talking 200 points away, and then failure to retest, failure to regain some of the balance above. Now I'm starting to think bearish, but until then, it just makes no sense. You got to trade what's in front of you, and what's in front of you is a market that is building an upward channel. And yes, you can always pick a top, and hopefully your pockets are deep enough to withstand the heat that a top and bottom picking require. Essentially, you should be running a fund and putting on the big short like in the movie. But other than that, you really need to look at what is it doing right now in the time frame you're trading, and trade based on your time frame. Please do not just take someone else's analysis or ideas, including mine, as this is what the market is going to do. You constantly have to ask, what is the time frame that this person is speaking about? If somebody's out there going, oh, it's going to crash, man, just tank, go sell it. Okay, what's your time frame? Are you someone who's holding options, leaps? Are you holding? What are you holding? How far down the line are you looking? Because if you're looking to go bearish that day, and this person is talking about it topping out and they're holding options to play that over the next 3 months, then you're in trouble. You constantly have to look at your time frame. So, watching CNBC and looking at an analyst's um, recommendation or a viewpoint on the market, if they don't give you some sort of a time frame, it's just they might as well be speaking gibberish. It doesn't mean anything to you. And just remember that when you're listening to market information, always understand what is a time frame. It's kind of like having a religious discussion with someone without understanding what their core beliefs are. It's hard to take what they say as objective or if it's faith-based. It's the same thing. You got to have a context and a basis for what everyone says, including myself. So I'm just telling you that just out of experience and to help you out. I'm not trying to stand on my soapbox and lecture, but you've got the hypos for today. It is Friday. Take it easy. Don't let the market burn a hole in your pocket into the weekend, and come back to fight another day on Monday. See ya.